Welcome back to our series on accounting journal entries. Today, we're going to dive into journal entries for sales transactions and discuss their impact on the income statement and balance sheet. Specifically, we'll focus on a two-part example involving Company ABC. Let's get started. On November 1st, Company ABC provided services to a customer on account, which means the customer agreed to pay later. The total price of the services provided was $2,000. Let's record the journal entry for this transaction. In this journal entry, we debit accounts receivable for $2,000 because it represents the amount owed by the customer. On the other side, we credit service revenue for $2,000 to recognize the revenue earned from providing the services. Now let's see how this journal entry impacts the income statement and balance sheet. In our example, the revenue from the services provided is recorded as service revenue. So, on the income statement, we would see an increase in service revenue by $2,000, which contributes to the company's total revenue. The net income also increases by $2,000, assuming there are no expenses. On the balance sheet, under the assets category, the accounts receivable account is increased by $2,000. This represents the amount owed to the company by the customer. Under the equity category, retained earnings also increases by $2,000 due to revenue earned from providing services. Now, let's fast forward to December 5th when the customer makes the payment. We'll record the journal entry for this transaction as well. In this journal entry, we debit cash for $2,000 because we are receiving the payment from the customer. On the other side, we credit accounts receivable for $2,000 to reduce the amount owed by the customer since they have paid in full. Now, let's discuss the impact of the transaction on the income statement and balance sheet. On the income statement, there is no impact. On the balance sheet, the customer paid the amount owed, resulting in a decrease in accounts receivable by $2,000. Simultaneously, cash increased by $2,000 since the payment was received. That wraps up our lesson on journal entries for sales transactions and their impact on the income statement and balance sheet. I hope you found this explanation helpful.